Their rule of thumb is 2 consecutive quarters of decline in GDP. That's the rule of thumb. Now, there's more to it. They look at unemployment. They look at, incomes. They look at a number of other factors. But based on the rule of thumb, we're already in a recession. The U.S. had declining GDP in the first quarter of 2022. We had declining GDP in the second quarter of 2022. That was just revised literally today, but the loss was not as big, but it's still a loss, still in the red. So we've had the 2 consecutive quarters of declining GDP through, at this point, several revisions by the U.S. government. So based on the rule of thumb, we're in a recession. Now, Janet Yellen, who doesn't know much about this, in the White House and others are saying, well, we're not in a recession. They're either changing the definition, or if you want to be a little technical about it, the National Bureau of Economic Research hasn't said so. But that's not unusual. What's normal is that the National Bureau of Economic Research can wait 3 months, 6 months, sometimes a year before they call the balls and strikes. And for that matter, it's not unusual that the recession's over before they tell you it started. So I don't expect to hear from the National Bureau of Economic Research until late this year, maybe early next year. And oh, by the way, wouldn't it be interesting if they waited until after the election? So don't underestimate the political twists in all this. I mean, that's definitely there. So I'm not waiting for them. I've seen the 2 consecutive quarters. I believe it's getting worse. The Atlanta Fed, Federal Reserve Bank of Atlanta, has a tracker. They're showing the third quarter of 2022. We're in the third quarter, won't be over until the end of September. They're showing that in positive territory, but it's been trending down from about 2% to 1.9% to 1.6%, et cetera. That's also not unusual. They have a very interesting statistical method. I give them a lot of credit, but what they do, everyone on Wall Street takes the data. Yeah, the GDP data comes in, some of it weekly, monthly, quarterly, whatever, and you got to get all the data before you make a final call. So what Wall Street does, they take the data they've got and they extrapolate. They say, well, based on regressions and correlations, et cetera, we think it's going to end up like this. And they're usually wrong. Atlanta Fed does something different. They take the data you've got, instead of extrapolating it, they say, well, what if this is all we have? What if this was the only data we had? And without guessing as to the unfilled pieces of the jigsaw puzzle, we'll give an estimate based on what we know. And that's what they do. But one of the results of that is the estimate, again, it's a rigorous method, but the estimate tends to decline over time because the pieces that they're waiting to get filled in are if you're in a recession, it's getting worse. By definition, the bad pieces are going to come in later in the quarter. So we saw this in the second quarter. They started positive and ended up negative. They started positive in the third quarter. It's trending down. We'll see where it ends up. I don't have to call it the third quarter, but it wouldn't surprise me if we're seeing the recession continue into the third quarter, even as the National Bureau of Economic Research tries to make up their minds. So in my view, we're in a recession, but there's no, again, just to be clear, we all have our views. There's no government agency saying who's right or wrong. They don't do that. A depression is completely different. People say, well, okay, if a recession is 2 quarters of declining GDP and a depression is worse than a recession, then a depression must be 10 quarters of declining GDP or something like that. That's not true either. First of all, you can have growth in a depression. And we did. The Great Depression is conventionally dated from 1929 to 1940. It was a severe technical recession from 29 to 32, and then early 33, and then another technical recession in 37 and 38. But from 1933 to 1936, the economy grew. Now, the problem was it was growing from a very low base. In other words, unemployment in the first term of the Roosevelt administration went from like 22% to 12%, but it was still 12%. I mean, 12% was an improvement, but nothing to write home about. So the point being, a depression does not mean continuous decline in GDP growth. What it means is depressed growth below trend. So if your potential is 3.5%, 4%, which it probably is in the United States, it's not necessarily higher than that except for short periods of time. But if your potential is 3.5%, 4%, and you're growing at 2%, which by the way, from 2009 to 2019, average annual growth rates were 2.2%. We had 10 years of 2.2%. And not a lot of variance around that. There were no 5% quarters. There was one mildly negative quarter, but it really kind of crowded around that central tendency. But if your potential is 3.5 and your actual is 2, then you have depressed growth. And imagine two curves. One's going up like this and the other one's going up like this. That gap between potential and actual, that's depressed growth, that's lost wealth. It's now well into the trillions of dollars of lost wealth because we're in a depression. I would argue we've been in a depression since 2007. Now, economists don't like the D word, the word depression, because it doesn't have a rigorous mathematical definition. You can't plug it into a closed form equation. It works exactly the way I described. And by the way, my source on that is John Maynard Keynes. So if it was good enough for him, it's good enough for me. But that's how he described a depression. So I would say we're in a depression, have been since 2007. And even periods of growth are well below trend, well below potential. A lot of wealth, trillions of dollars of wealth being left on the table. We're in a technical recession right now. We'll see if it gets worse. My expectation is it will, but that remains to be seen. So, but the White House would say, we haven't had a depression since the 1940s, and we're not in a recession. So, pick your experts, but the White House and the government don't have a very good track record of this.